Hi everyone, welcome to this Times Square in Finance. Well, last week only had 4 work days because of Dragon Boat Festival. Few things happened. China's bonds market just floated on the river of uncertainty, couldn't make a consensus. So let's just make this time's video short and efficient, alright? First, see the overall view of the bonds market last week. Total bond yields curve was a bit of bullish and flat compared to the week before. Yields of 3, 5, 10, and 30 years terms went down 4, 1.8, 1.6, and 2 base points. If we compare to the one of December 9th last year, the curve kept twisted and flat. Yields of 3 years term increased 5 base points, 5 years term went down 4 base points, 10 and 30 years terms went down 26 and 24 base points. The spread between Chinese Treasury bonds and commercial bank perpetual bonds kept at the same level, with 5-year spread was 45 base points. About actions of investment agencies, for the short and middle-term bonds, big banks and policy banks bought 51.2 billion, joint stock banks sold 96 billion, and for the long and ultra-long-term bonds, fund bought 21 billion, whereas joint stock banks sold 23.4 billion. Then let's check out details part and see what happened last week. In terms of fundamentals, no big things really happened, and no economic data came out. Last week was quite peace. But the noise came from the outside last weekend. Trump brought his unsatisfied mood to Elon Musk to the public, and Elon also accused Trump of betraying him. Remember what I said before, this is a pretty mess. Includes the confused and harmful tariff things for both of our countries. Inside the country, leaders of China and the United States held talks about tariffs. Well, the words of that are basically official types, but they both agree to solve the problem and try to make things right. So the total macro environment gave no clues about where the bonds market might go. Yeah, in this situation, from a long-term view, China's bonds market fluctuated and changed less than 2 base points compared to the week before. For funding conditions, the PBOC announced an 1 trillion reverse repurchase operation ahead in months. This was an unusual thing. Making announcement ahead transfer this move from a post notification to a bidding notice, which definitely shows a loose and caring attitude towards the bonds market. Furthermore, the financing price for non-bank agencies has been under 1.5% since past several days. So from this view, the short and middle-term bonds went down more than other terms in recent, and this situation may last for a while. Then what should we pay our attention next? The most crucial issue is still tariff thing. First, the 90 days of transition period will end up in July. Is there any possibility to put it off again? Second, does Trump have any replacement for his discounted reciprocal tariffs? Last, the attitude of the international community to tariffs has been changing all the time. Needless to say, no country likes it, which may create an anti-tariff trend to fight against the bullying action of Trump. Speaking of domestic, economic data is upon us, this or next week. We will see the prospect about economic recovery through it. So let's just wait and see the numbers. About bond investment strategies, in this inside and outside environment, the short and middle-term bonds have more certainty for getting profits. The only flaw is that the duration is pretty short, so the ability of making money is not that good. Though long and ultra-long-term bonds have a strong ability to make money, but Trump and other macro factors influence it a lot. And I'd have to mention that yields of long and ultra-long-term bonds have been decreased more than any other term since this year, which means a lot of investors put huge stakes in there, and the risk is gathering as time goes by. To summarize, we can make a pyramid kind of portfolio. The very foundation is short and middle-term bonds, takes a big percentage to make safe money, and the SPY is long and ultra-long-term bonds, takes a small part for gambling and making extra trading gains. So as always, if you want to know more useful finance information about the Chinese bonds market and economic situation, please like, share, and subscribe. I will always be here, share my understanding and experience and my investment strategies, and waiting for you. So bye guys, until next time.